What's up, everybody? It's your loan officer that used to be an underwriting manager and your mortgage expert, Devontae Brooks. And if you're looking to buy a house in the Chicagoland area or the Quad Cities or any of the states that I'm licensed, and you're wondering about how much home you can afford on your salary, well, guess what? I'm going to help you out with that. So stick around, because in this video, I'm going to break down some of the key guidelines that'll help you make a smart financial decision. So let's get into it. Listen, buying a house is one of the biggest investments you'll ever make. And while the mortgage process can seem complex, convoluted, I'm here to make it clear and simple. And guess what? I want to have fun while we're doing it. So my job is to protect your blind spots and give you the clarity you need to make the best financial decision for your financial future. Look, I've been in the mortgage industry for 16 years, and my team and I are experts in the industry. We don't just want to help you get a mortgage. We want to set you up for long-term financial success. So let's get into it. How much home can you afford in today's market? Well, with inflation and rising costs, a lot of people are wondering, what can I qualify for just to buy it properly, and how much can they truly afford? Well, I want to share some guidelines that'll help you figure this out. Now, you probably heard things from friends and family members and co-workers, and maybe seen some things online that can be confusing. So today, I'm just going to break it all down for you. Guideline number one, it's your income. So for simplicity purposes, we're going to use $120,000 as your annual gross income. This number gives us a solid foundation for the math that we're going to do. Guideline number two is your debt to income ratio, or sometimes you call it DTI in the industry. The key number that you need to know is 50%. Most mortgage companies will allow you to borrow up to 50% of your gross monthly income, though some programs will allow you to borrow a little bit more or a little bit less. So for someone making $120,000 per year, that's $10,000 a month in gross income. Half of that's $5,000, which means your total debts, including your mortgage, taxes, insurance, should not exceed $5,000 a month. That $5,000 includes things like your car payments, your student loans, your credit cards, but it doesn't include everyday expenses like groceries, your gym membership, gas for your car, things of that nature. Let's take this to a real life example. So let's say a couple in Chicago is making $10,000 a month in combined household income, and then they have $1,300 a month in car and credit card payments. The max they can spend on all of their debts, including a mortgage, is $5,000. Since $1,300 is already taken up by those other debts we discussed on the credit report, that leaves $3,700 to cover a mortgage, property taxes, homeowners insurance, and PMI. Let's reverse engineer this and back into this couple's housing price. So with $3,700 to work with, this couple could likely afford a home price up to about $450,000 at the current market rate. That $3,700 would need to cover your mortgage, taxes, insurance, everything else, also your PMI. So for example, let's say that $2,800 goes toward the mortgage, that's the loan, $750 goes toward property taxes, and that leaves $150 for homeowners insurance. Here's a pro tip for you. Typically, people will qualify a purchase price that is somewhere between 3 and 4 times their annual gross income. So if your household income is $100,000, you're probably going to qualify for a loan somewhere between $300,000 and $400,000. That gives a little bit of bandwidth and a little bit of flexibility based on what's on your credit report. Let's talk about some tips if you're not quite there yet, or the place that you want to be. So if you've been looking at homes outside of your price range that you qualify for, there are ways to improve your situation. One option is to pay down some debt. If you have credit card debt with a balance of whatever the balance is, and you have a $300 a month minimum payment, paying that off frees up $300 in your budget, allowing you to qualify for a higher mortgage. Another option is focusing on paying off installment loans like auto loans, unsecured loans, student loans. If you have less than 10 payments on a car loan, guess what? Most programs allow us to exclude that from your debt to income ratio, and you can qualify for a higher mortgage. Let's think strategically about this. If you are deciding between putting down more money on a house or using some of your money to pay off some debts, I always encourage people to have the highest and best use of their money. What do I mean by that? You want to get the most bang for your buck. So sometimes clients get in their own head and get in their own way and want to put down this big down payment, but it's always shocking to them how it barely changes their monthly payment. You want to get the most bang for your buck. Let's say you want to put down 10% on a house, but putting down 5% and using the other 5% to pay off a car loan, an unsecured loan, a student loan can actually free up your monthly cash flow. And you may save more money on a month-to-month basis by eliminating that debt versus throwing that extra money down towards your mortgage payment. You get more bang for your buck. Depends on the situation. Think of it like this. Would you rather spend $20,000 to reduce your mortgage payment by $200 or eliminate a $500 car payment? Let's bring this home. Buying a home is one of the biggest financial decisions you'll ever make. So knowing the numbers and understanding the rules, preparing yourself for the financial commitment before you hit the market, it is critical towards your success and making it easy for yourself. If you have any questions about buying a home, getting pre-approved, or anything else related to the mortgage process, do me a favor, go ahead and reach out. You can book a call, book a meeting. I'm easy to find. And do me a huge favor, leave a comment, subscribe for more informative videos. Go ahead and contact me directly if you need anything else. And remember, if you haven't yet, you better call Brooks.